My name is Aman and I'm a CPA practicing in the Metro Vancouver region of British Columbia, Canada. In this video, I'm going to help you plan your first home purchase here in Canada. 2020 has been a chaotic and a challenging year for all of us, but life isn't stopping for the pandemic and people are still going to have to make important life decisions, like buying a house. We've seen robust home sales and listing activity all across Metro Vancouver in the last few months. This increased activity can be attributed in part to lower interest rates and in part to changing housing needs during the COVID-19 pandemic. If these reasons have motivated you to take the big step of home ownership, you will want to plan for it well in advance. The last thing you want to do is show up on your accountant's door and tell him that you've just closed on a property and you need, let's say, $250,000 from your corporation as soon as possible to pay for this new house. Your accountant's going to look at you pretty concerned and give you a blank stare and ask you why you did this without consulting him. Because if you spoke to your accountant previously, he would have told you that you should probably be planning for this well in advance. You should rather look to take out this money over 2 to 5 years because that will save you a lot more in taxes. If you were to take out, let's say, $50,000 over a period of 5 years, you're paying significantly less tax than you had just pulled out $250,000 from your corporation all in just 1 year. Thus, the first thing which you need to do is plan well in advance and open this dialogue with your existing accountant at this time. The second thing which you want to make sure when you do your planning for your new home purchase is to make sure that you take advantage of your RRSPs and something called the Home Buyers Plan. Well, several years ago, Canadian government came up with this new program called the Home Buyers Plan. This plan enables you to pull out money from your RRSPs on a tax-free basis towards purchasing a new home. The way the rules work is to pull out up to $35,000 tax-free from your RRSPs under the Home Buyer Plan, so long as it goes towards the first new home. To qualify for this, you must meet 2 conditions, and these conditions are: first, that you may not have owned a home over the past 4 years before this, and secondly, the funds you are pulling out towards this home purchase must have sat in your RRSP account for at least 3 months. As long as you meet these conditions, this is a fantastic way for you to pull out money on a tax-free basis from your RRSP towards the purchase of a brand new home. The third piece of advice which I have for most of the potential new homeowners is don't bite off more than you can chew. Yes, you can make great money inside your corporation, but if you don't plan for it properly, you can nearly lose half of that in taxes. So the reality is you want to make sure you have a good amount of money in your personal accounts for the down payment, plus you want to be certain that your monthly expenditures and your monthly payments are going to be reasonable considering how much money you expect to draw from your corporation. By doing this, you can save yourself the headache of having to pay more taxes than you really need to. To recap, the 3 things you want to look for in planning your new home purchase are: firstly, you want to make sure that you plan well in advance. Talk to your accountant and get this dialogue going as early as possible. Secondly, make sure you contribute to your RRSP so that you can draw from your home buyer's plan to purchase this house. Thirdly, don't bite off more mortgage than you can chew. More than one person has walked into our office with credit problems caused by taking on too much house mortgage and they're spending around 60% of their net income on housing. If you need new tax updates, please consider subscribing to this channel, and thanks for watching and see you in my next video. Until then, goodbye.